Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, September 16th, 2010. Well, the markets are staying in a very, very tight range today. A slight down move overall with the S&P, Dow, and Nasdaq all negative. Dow down 1 point on the day, Nasdaq down 5.5, and the S&P 500 down about 3.5. Nasdaq and S&P 500 down about 1/4%, while the Dow is staying basically on the flat line. Now, bottom line is this, folks. We got jobless claims this morning that came in very well. All right, 450,000. Overall, that's a very positive number for what we've been seeing lately. Remember, just a few weeks ago, the number was near 500,000. To be at 450,000, that's a major break point in this market. If you can get below 450,000, that should be a positive. Now, regardless of that number, thinking again it was a positive number, the markets are not responding in that manner. Why? Well, basically the markets have had huge gains over the last multi-week period. And it's very hard when you have such big gains in such a short time frame. And I can show you the 60-minute chart here. Look at this move up. I mean, essentially you have a huge move up. I can zoom out to show it even better. Look at this. From this pivot low going back to really the end of August all the way into September, we're basically hovering up 8% on the markets. And again, that's in about 2 weeks time frame. So again, when you gain that much in such a short period, any good news out there is probably already factored in. So again, 450,000 in jobless claims, everyone thinks that's good, but it's really been factored in already, and that's why the markets are not responding in a majorly positive fashion. They're just too tired. Think of it like a marathon runner. A marathon runner just ran a full marathon. Do you think they can run another full marathon right away? Or maybe they need to take a few weeks off or a day or two break before they go out and run that next marathon. Same thing applies to the markets. Think of it in terms of that, and you'll understand exactly what's going on. All right. Now, again, going back to the intraday chart, I'm actually fascinated by today's intraday chart because of the tight range we're in. The markets have had little movement up or down. It's been choppy, but in a very, very tight range. Really from this 112.85 to 112.45 range. That's a 40-cent range up and down, and you have not budged outside of that range at all. From, again, the gap down right here, we pushed up into these moving averages. Just draw that line straight across. From this pivot low yesterday, see the pivot low right around 11:30 a.m. Eastern Time. Draw that line straight across, and you've hammered it a couple times today. And you are just hovering in the middle of that range, going up, down, up, down, up, down. It's very rare. We've had quiet days over the last couple days, as you can see. Yesterday, for instance, the market gap down ended basically flat to slightly positive. If you go back to a couple days ago, the market gap down, chopped around a little, didn't do a whole lot, ended basically flat on the day as well. So we've had a lot of flat days in a row. That can be seen on the daily chart. If you look at your daily chart, look at the last couple days. 1, 2, 3, 4, and this one, number one day, was a gap up, but still it didn't go anywhere the rest of the day. You've had basically 4 days where off of the gap up, you've gone sideways. But again, the amazing thing about today is that all the previous days you've had volatile intraday moves. A float up, a push down, a float up, and then some selling. Same thing yesterday. Gap down, and then it went up the rest of the day. Today it's just going sideways in an extremely tight range. And again, to see this tight range on such light volume, again, after pushing through the holidays is quite amazing. But it all comes down to thinking about what's going on in this market. Tomorrow you have options expiration. The institutions, what is this action telling you? It's telling you that the institutions do not want to mess around. All right, so bottom line, the institutions don't want to mess around. They just want to keep this market in check. Obviously, they have prices of stocks generally in the range where they want them for expiration. Again, that's where they're going to maximize profits. So obviously, they're holding this market up in a major way to keep that expiration. So when they do expire on the options, they're making a good premium off of the plays that they've sold. And again, you can see, again, that's telling you why the market's just going sideways here. In addition, not only is tomorrow Friday, but early next week, we have some major things. You have Obama making a speech early next week. You have the Federal Reserve meeting next week. You have to figure this market's not going to make a major move until after the Federal Reserve next Wednesday. Now, after next Wednesday, it's all off the table. I mean, now you can start to really look and see, all right, well, where's the next move coming? You get some word out of the Fed. What is the Fed thinking about this economy? All these factors now are on the table. But you have to say to yourself, Friday, Monday, Tuesday, and even up partially on Wednesday of next week, it's highly unlikely to see a major move up or down. Now, could you go up 100 points or down 100 points? Yeah, of course. Could you float up because it's light volume and they're going to keep the volume light? Yes, you could absolutely do that. But again, as I said, it's very unlikely that you're going to have a 500-point move up or 500-point move down in such a short period. Again, not a ton of economic news. We have a little bit over the next few trading days, but nothing crazy as well. All right, markets are floating up. You'll have resistance here. If you break this level, you'll probably just float up to gap fill. Gap fill will be right up here, right around the 113-ish level. or just below the 113 level right around here. That'll be your level, again, right above 113. If you break this white trend line, you'll float up that way. If you don't, then just expect this market to continue in a tight range, jumping up, down, up, down, up, down. And if you broke to the downside, you have the 200 coming up right underneath to support it anyways. I honestly think, if anything, the market will just float sideways to up the rest of the day. It wouldn't surprise me if you break out towards the afternoon session just because the volume is so light, folks. I mean, it is really light. In fact, as I speak, we're starting to break through here. A little buy program hitting the market. Nice little buy program definitely hitting the market at this point in time. All right. So that's what we're seeing here. If we take a look at a couple different stocks, Goldman Sachs is down slightly, but you can see even Goldman Sachs is floating sideways to up because the volume is so light. JP Morgan is up 4 cents. Look at that. It's exactly the same, folks, just floating sideways to up. There's your buy program. JP Morgan is a Dow stock. Therefore, if the Dow is getting a rally here, JP Morgan has to be participating because it's in the Dow. So a buy program on the Dow stocks would do that. ExxonMobil, take a look. Exxon is also in the Dow. You can see the buy program affecting Exxon as well to the upside. And Chevron here, hovering up as well. Look at the buy program affecting. These are all Dow stocks, these last couple that I've talked about, JPM, Exxon, and Chevron. So again, a buy program generally is focused on those Dow stocks or on the S&P stocks, a basket of S&P stocks, and that's why you'll see all the same move, and that's how you know it's a buy program when it comes through all those key stocks that are in the Dow when they all get moves. All right, so again, keep an eye on that, folks. I do find it fascinating in many ways. The action today, again, tells me the volume could remain light for the next 3 trading days, maybe even 4 trading days going into next Wednesday. And again, then we get some Fed word out. Obama's speech will be interesting as well. We'll have to see what the economic news is early next week as well in terms of where this market could head. A couple other things to go over. Chinese stocks. We've been highlighting a couple of these Chinese stocks. We've been making some good money on some of these Chinese stocks over the last few days, few weeks. FUQI, which we talked about yesterday a little bit to the premium members in the chat room and in the intraday, in the nightly video in the research center. You can see here an unbelievable move the last couple days. This stock, again, about a 40% jump in just the last 2 days. Why? Was there any great news? Not necessarily, but really because you have to look at it in terms of the short percentages in these stocks. Some of these Chinese stocks are on the dead lows. If I zoom out, look at how low this is. This thing used to be 20 bucks at the beginning of 2010. It was now just yesterday trading under 5 bucks. Now just a short squeeze coming in, propelling this up back to 7 bucks from almost $5 to about $7, 40% move. Taking a look at a couple other stocks, CCME is getting a jump after getting killed yesterday. It's reversing beautifully on the back of an announced buyback. Tons of shorts in these. And again, some of the ones I like, Zoom, Z-O-O-M. This is one to watch. It's a very thin one, but keep an eye on it, guys. Dead lows here as well on this. And let me bring up that chart. Here's the chart on ZOOM. Let me get that up for you, and we'll bring that up here. There it is. Look at that. Dead lows after being as high as $9, now down to $3.50. I like this as a possible short squeeze as well. CIIC is also a nice play. Look at this. $4, $5. It's now trading at 63 cents. These are all plays that if they ever start going, they'll be propelled probably 30 to 40% just the same because of the amount of shorts in them, short covering rallies that will go on. All right, again, so keep an eye on these. I'm just throwing these tidbits out. I think you should keep an eye on them going forward based on what we're seeing here in the Chinese sector. The ADRs, we're really talking about ADRs. Anything China-related that's profitable at the low end of the chart after being much, much higher earlier this year, a lot of them are getting squeezes, and we're seeing this really on FUQI being the leader here. What a move up. Again, take a look. Just yesterday, this is where it started out, under $5. And again, the high pivot today was $7.30. Truly an amazing percentage move from Mega Money. All right, all in all, folks, join the Research Center to get more analysis, guidance, education, and swing trades. That's what we supply out there in the Research Center. It's included all for $49.99. It's a beautiful thing like that. $49.99, you get it all. Chat room is separate. That's also fantastic. Live play-by-play analysis with trades called out, key levels. You can ask questions in the intraday stock chat. It's a fantastic forum. Have a wonderful rest of the day, folks. I'll talk to you soon.